Listen closely. Give me the next few minutes, and by the end of this chapter, you'll understand why smart traders still self-destruct and what invisible rule has been running your decisions without you even knowing it. If you've ever closed a trade and said, "How did I screw that up again?" you're exactly where you're supposed to be. Before we go any further, comment below. When was the last trade you took just because you had to be right? Not because it fit your plan, not because the risk made sense, but because your ego was on the line. If you're smart, disciplined, and logical, you shouldn't be here. Yet, here you are. And that's not an insult. That's the truth about trading. Most people think trading is about charts, indicators, entries, exits. That's the surface level. What actually decides your results lives underneath, inside your brain, inside your emotional wiring, inside patterns that were built long before you ever opened a trading platform. Here's the promise of this audiobook. You're not here to learn another strategy. You're here to learn the brain rules that separate consistent traders from emotional ones, the rules that decide whether you stay calm or spiral, whether you follow your plan or sabotage it, whether you survive long enough to win. And here's something almost nobody tells you. The market doesn't beat traders. Their own nervous system does. Think about it. You can know exactly what to do and still not do it. You can backtest a profitable system and still break it in real time. You can read every trading book out there and still overtrade after a win, revenge trade after a loss, or freeze when opportunity shows up. That's not a knowledge problem. That's a psychology problem. Legendary trader Paul Tudor Jones once said, "The most important rule of trading is to play great defense, not great offense." Most people hear that and think it's about stop losses. It's not. It's about protecting your mental capital. Because once your mind is compromised, your strategy doesn't matter. Here's a question I want you to sit with. Why do traders feel the strongest urge to trade after winning or after losing? Why does confidence turn into overconfidence? Why does one red trade turn into 5 reckless ones? We'll answer that by the end of this chapter. And when you hear it, you'll realize something that most traders never figure out in their entire career. Right now, your brain doesn't know the difference between financial risk and physical danger. To your nervous system, losing money feels like losing safety, status, control. That's why your heart rate spikes. That's why your thinking narrows. That's why you start chasing, forcing, reacting. And here's the uncomfortable truth. The market doesn't reward intelligence. It rewards emotional regulation. Some of the most profitable traders in history weren't the smartest guys in the room. They were the calmest. They didn't need to be right. They needed to be consistent. If you've ever watched interviews with elite traders, you'll notice something strange. They don't sound excited. They don't sound desperate. They sound boring, detached, almost indifferent. That's not because they don't care. It's because their brain is trained to follow rules instead of emotions. Most traders are doing the opposite. They're using emotions to make decisions and rules to justify them afterward. Let me ask you another question. If trading was purely logical, why do emotions spike after the decision is already made? Why does fear show up only once you're in the trade? Why does greed whisper only when you're up? Here's the answer most people never hear. Your brain doesn't want money. It wants certainty. And markets are uncertainty machines. Every time you place a trade, your brain scans for danger. Every tick becomes a signal. Every fluctuation feels personal. And unless you've trained for this, your nervous system will hijack your execution. That's why this audiobook exists. You didn't come here to be entertained. You came here to rebuild how you think under pressure. By the end of this series, you won't just understand trading psychology, you'll understand your psychology, why you hesitate, why you rush, why you break rules you swore you'd follow. And here's the part most people don't expect. Once you see these patterns clearly, they lose their power. Let me leave you with one final question before we move on. If discipline was just about willpower, Wouldn't you already have it by now? Think about that. In the next chapter, we're going deeper. We're stepping inside the trader's brain under pressure. Real neuroscience, real mechanisms, the exact reason fear and greed show up when they do, and how elite traders train around them. Because once you understand how your brain actually works, you stop fighting yourself, and trading finally starts to feel calm. Stay with me. Ever been in a trade that was perfectly fine until you started watching every tick like it owed you money? Listen for the next few minutes, because by the end of this chapter, you'll understand what actually happens inside your brain under pressure, and why knowing this alone can stop a huge chunk of emotional mistakes. Quick question. Comment below. What emotion hits you first in a trade? Fear, greed, or impatience? Don't overthink it. Your first instinct is the truth. Here's something nobody warns traders about. The moment you click buy or sell, your brain stops being logical and starts being biological. You think you're trading charts. Your brain thinks you're fighting for survival. Inside your head, there's a small, ancient part of the brain called the amygdala. It doesn't care about risk-reward ratios. It doesn't care about backtests. It cares about one thing: threat detection. The second money is on the line, the amygdala lights up. Heart rate increases. Breathing tightens. Your focus narrows. That's why you miss obvious signals. That's why you cut winners early. That's why losers suddenly feel personal. This is the part most traders never hear. Under stress, blood flow shifts away from the prefrontal cortex, the part responsible for logic, patience, and planning, and towards survival systems. In plain English, the smarter you are, the dumber you become under pressure. That's not an insult, that's neuroscience. Ever notice how your best trading ideas come when you're flat, calm, detached, clear, and your worst decisions come when you're already in a position? That's because uncertainty triggers dopamine and cortisol at the same time. Dopamine says, there's a reward here, go get it. Cortisol says, this could go wrong, protect yourself. That chemical cocktail creates impulsive behavior, overtrading, FOMO, revenge trading. This is why traders chase breakouts they didn't plan, why they double down after losses, why they feel invincible after wins. And here's the wild part. Your brain reacts more strongly to losing $1 than gaining $2. Loss aversion isn't a mindset flaw, it's hardwired. Legendary trader Mark Douglas used to say that the market offers unlimited opportunity, but the trader's mind can only handle so much uncertainty. Most traders don't blow accounts because they're wrong. They blow accounts because their brain can't sit with discomfort. Think about the last time you broke your rules. Was it really about the setup, or was it about relief? Relief from fear, relief from boredom, relief from feeling out of control. Here's a fact-based question for you. Why do traders make the worst decisions during high volatility when the opportunity is technically best? Because volatility amplifies emotional signals. Your brain mistakes movement for danger, speed for urgency, noise for meaning. By the end of this chapter, here's the thing I promised you'd learn that most people never hear. You don't rise to your strategy in the market. You fall to the level of your nervous system. Elite traders don't eliminate fear. They train their brain to recognize it without obeying it. They don't try to feel confident. They try to feel neutral. That's why the best traders look almost bored during execution. Calm isn't personality, it's conditioning. So let me answer the earlier question. Why does fear and greed show up exactly when you need clarity most? Because the market puts your brain into a simulated survival environment, and unless you have rules that override emotion, biology wins. Here's the shift you need to make. You're not training to predict markets. You're training to operate under uncertainty. And that brings us to the next layer. Once you understand how your brain reacts under pressure, the next question becomes this: how do elite traders design their entire approach to protect themselves from their own psychology? In the next chapter, we step into the mindset of Paul Tudor Jones.
why defense comes before offense, why protecting capital and your mind is the real edge. Because once your brain feels safe, clarity follows.
Listen carefully. In the next few minutes, you're going to learn why the best traders in the world obsess over defense, and how one simple mindset shift can instantly reduce fear, overtrading, and emotional blowups. If you've ever said, "I was right, but I still lost money," this chapter is for you. Let me ask you something right away. Comment below. When was the last time you sized up because you felt confident? Be honest, that answer explains more than any indicator ever could. Most traders wake up every day thinking about how much they can make. Elite traders wake up thinking about how much they're willing to lose. That difference is everything. Paul Tudor Jones, one of the greatest macro traders of all time, once said his #1 rule was simple: never lose a lot of money. Not always be right, not catch the big move. Protect the downside. Why? Because defense creates clarity. Here's what most people miss. Risk management isn't about math first, it's about psychology first. When your risk is undefined, your brain feels unsafe. When your brain feels unsafe, it looks for control. And that's when traders start forcing trades, moving stops, doubling down, and breaking rules. Think about the last time you traded too big. Your heart rate was up. You were glued to the screen. Every tick felt like a verdict on your intelligence. That wasn't excitement. That was your nervous system screaming. Paul Tudor Jones understood something early in his career that most traders learn too late. You don't need to win big. You need to not lose big. He survived crashes, volatility, and uncertainty, not because he predicted better, but because he played defense better than almost anyone else. Here's a fact-based question for you. Why do traders make their worst decisions after a big win? Because profits create a false sense of safety. Dopamine spikes, risk feels smaller than it actually is, and the brain whispers, "Press it." That's when accounts get damaged. Elite traders flip the script. They get more conservative after wins. They tighten risk. They protect capital. That's not fear. That's professionalism. By the end of this chapter, here's the thing most traders have never been told. Proper risk makes discipline automatic. When your risk is capped, your emotions calm down. When your emotions calm down, execution improves. When execution improves, consistency becomes possible. Most traders try to control emotions directly. That never works. The fastest way to control emotion is to control exposure. Ask yourself this: if you knew the maximum you could lose today was small and acceptable, would you still panic? Would you still hesitate? Would you still revenge trade? Probably not. That's the Paul Tudor Jones rule in action. Defense first, always. So here's the answer to the question we asked earlier. Why does sizing up after a win feel so tempting? Because the brain confuses recent success with future certainty, and the cure isn't motivation, it's structure. Structure protects you from yourself. This chapter isn't about trading smaller forever. It's about trading smart enough to stay in the game. Because once you feel protected, your mind can finally focus on execution instead of survival. And that leads us to the next step. Now that you understand why defense matters, the real question becomes this: how do you build discipline that holds up when pressure hits without relying on willpower? In the next chapter, we'll break down why emotional control is not about trying harder. It's about building systems that make discipline inevitable. Stay with me.
If you've ever promised yourself, "Next time I'll be more disciplined," and then watched yourself break that promise anyway, listen closely. In the next few minutes, you'll learn why willpower fails traders and how elite performers build emotional control that holds up when pressure hits. Not motivation, not hype, a system. Quick question. Comment below before we go on. When was the last time you knew the right thing to do and still didn't do it? That moment right there? That's the gap this chapter closes. Most traders think discipline is about being strong, grinding harder, white-knuckling through emotions, telling yourself to just follow the plan. That works until it doesn't. Here's the truth nobody wants to hear. Discipline powered by willpower always breaks under stress. Because willpower is a limited resource. Stress drains it. Fear drains it. Volatility drains it. And the market is a stress machine. Ever notice how discipline feels easy on a calm day and impossible during fast moves, losses, or big wins? That's not because you're weak. It's because your brain is doing exactly what it was designed to do: conserve energy and seek relief. Elite traders figured this out a long time ago. They don't rely on willpower. They rely on structure. Think about someone like Ray Dalio, obsessive about rules, checklists, decision frameworks, not because he lacks intelligence, but because he understands human psychology. Here's the key idea. Emotional control is a system, not a feeling. When your system is clear, your emotions fall in line. When your system is vague, emotions take over. Let me give you an example you've lived through. You enter a trade without a clearly defined stop. At first, it's fine. Then, price moves against you. Now your brain starts negotiating. Let's give it a little room. It'll come back. I don't want to take a loss here. That's not emotion being the problem. That's lack of structure creating emotion. By the end of this chapter, here's something most traders have never been told. Rules don't restrict freedom. They create calm. The more decisions you remove during the trade, the calmer you become. This is why elite traders predefine everything: entry conditions, exit conditions, risk limits, when to walk away. They don't decide in the moment because the moment is compromised. Here's a fact-based question. Why do pilots rely on checklists even after thousands of flight hours? Because under pressure, humans forget obvious things. Trading is no different. So let's answer something important. Why does discipline always seem to disappear at the worst possible time? Because stress shuts down the thinking brain and hands the wheel to emotion, unless you've built rails that keep you on track. That's what systems do. They act when emotions can't. And here's the part that might surprise you. Systems don't kill intuition. They protect it. Once your downside is controlled, once your rules are clear, your mind actually becomes freer to read the market. No second guessing, no panic, no internal arguments. Let me ask you this. If discipline was just about trying harder, wouldn't you have mastered it already? The traders who survive long-term don't feel more disciplined than you. They feel less tempted because temptation has fewer places to sneak in. So here's the answer to the big question we opened with. Why do smart traders still break rules? Because they build plans for calm conditions and trade in chaotic ones. Structure is how you bridge that gap. Now here's where this gets even more powerful. Once you have emotional control through systems, the next lever that changes everything is risk. Not strategy, not indicators, risk. In the next chapter, we'll uncover how position sizing and risk calculation quietly shape your emotions before you ever feel them. Because when risk is right, discipline becomes effortless.
Ever felt calm before entering a trade, then instantly tense the moment you click the button? In the next few minutes, you're going to learn why position size quietly controls your emotions and how one hidden math rule can turn chaos into calm without changing your strategy at all. Before we go any further, comment below. What hurts more for you, being wrong or losing money? That answer matters more than you think. Most traders believe emotions come from outcomes. Wins feel good, losses feel bad. That's only half true. Here's the part almost nobody talks about. Emotions don't come from winning or losing. They come from risk mismatch. You can take a losing trade and feel fine. You can take a winning trade and feel sick to your stomach. Why? Because your brain isn't reacting to the result. It's reacting to how much was at stake relative to what it can tolerate. This is where math meets psychology. Think about a trader like Ed Sykota, one of the pioneers of systematic trading. He didn't obsess over entries the way retail traders do. He obsessed over position sizing. Why? Because sizing determines survival. Here's a fact-based question for you. Why do traders break rules more often when they trade larger size? Because larger size amplifies emotional signals. Every tick feels louder, every pullback feels dangerous, every small loss feels unacceptable.
By the end of this chapter, here's something most traders have never heard. Your brain has a maximum emotional risk limit, and is usually far lower than your financial one. When you exceed it, discipline collapses. Let me make this real. Imagine risking 1% of your account on a trade. You place the trade, you breathe, you let it work. Now imagine risking 5%. Same setup, same strategy. But now you're glued to the screen. You move stops, you interfere. The market didn't change, you did. That's why elite traders think in terms of acceptable loss, not potential gain. Risk calculation isn't just math, it's emotional engineering. Here's the hidden rule. When risk is small enough to be boring, execution becomes clean. Boring is good. Retail traders chase excitement. Professional traders chase repeatability. This is why fixed fractional risk works so well psychologically, not because it maximizes returns, but because it stabilizes behavior. When every trade risks roughly the same emotional weight, your nervous system stops overreacting. And here's the twist most people miss. Smaller size doesn't slow growth, emotional mistakes do. Blown accounts don't come from bad strategies, they come from oversized emotions. Let me ask you something uncomfortable. Have you ever avoided taking a perfect setup because the last loss felt too painful? That wasn't fear of losing money, that was fear of emotional pain. Proper risk sizing solves that. Now let's answer the question we opened with. Why does clicking the button change everything? Because the moment capital is exposed, your brain asks one question: can I survive this? If the answer is unclear, emotion takes over. But when risk is clearly defined, when loss is acceptable, when size matches your tolerance, your mind relaxes. That's the secret. Elite traders don't feel braver than you, they feel safer. And safety creates consistency. So here's the thing you may never have heard before. The fastest way to calm your mind is not meditation, not confidence, not motivation. It's correct position sizing. Once risk is right, discipline stops feeling like effort. And that brings us to the final transformation. Because when risk is controlled and systems are in place, something deeper changes: your identity. In the next chapter, we'll talk about the shift from reactive trader to the operator, from emotional participant to professional executor. Because consistency isn't just what you do, it's who you become. Stay with me.
If you've ever looked at your trading history and thought, why do I keep repeating the same mistakes, even when I know better? Stay with me. In the next few minutes, you'll learn the identity shift that turns reactive traders into consistent operators, and why this change matters more than any strategy you'll ever learn. Quick question before we go further. Comment below. Do you see yourself as someone trying to win trades, or someone running a trading operation? That answer reveals where you are right now. Most traders think consistency comes from doing better. Better entries, better exits, better timing. Elite traders think differently. They focus on being different. This is where everything we've covered so far comes together. When you control risk, build systems, and understand your brain under pressure, something subtle starts to happen. You stop reacting. You start observing. Think about someone like Jesse Livermore. When he was trading emotionally, he blew up fortunes. When he traded like an operator, patient, selective, detached, he built them. Same market, different identity. Here's the part most people miss. Your brain is always asking one question: who am I right now? If you see yourself as a trader trying to prove something, every trade feels personal. If you see yourself as an operator executing probabilities, outcomes lose their emotional grip. By the end of this chapter, here's something rarely talked about. Consistency isn't a skill, it's an identity. Reactive traders need action. Operators wait for conditions. Reactive traders chase certainty. Operators accept probability. Reactive traders feel every tick. Operators feel almost nothing. That doesn't mean they don't care. It means they've learned emotional detachment. Here's a fact-based question. Why do consistent traders take fewer trades yet often outperform those who trade more? Because fewer decisions mean less emotional fatigue. Less fatigue means better judgment. That's not luck, that's design. Professional traders don't sit down asking, how can I make money today? They ask, what is my job today? And most days, the job is doing nothing. That's the identity shift. Let me ask you something uncomfortable.
Have you ever felt bored when you weren't in a trade, then relieved once you were? That's not passion. That's emotional dependency. Operators don't need stimulation from the market. They need alignment with their process. Here's the truth most people never hear. Detachment is not indifference, it's clarity. When you stop needing the market to validate you, your execution sharpens. This is why elite traders journal, review, and grade themselves on process, not profit. Profit is lagging feedback. Process is leading behavior. So let's answer the big question we opened with. Why do mistakes repeat even when knowledge improves? Because behavior doesn't change until identity does. Once you see yourself as an operator, breaking rules feels out of character, not tempting, just wrong. And that's the real breakthrough. You don't force discipline anymore. You express it naturally. Now here's where we land this journey. You've learned how the brain reacts under pressure, why defense comes first, how systems create discipline, how risk sizing calms the mind, and how identity locks it all in. All that's left now is commitment. In the final chapter, we'll bring everything together. A call to action, a reminder of who you're choosing to become. Because consistency isn't built in one trade, it's built in a decision you make every day. Let's finish strong.
If you've stayed with me this far, listen closely. In the next few minutes, you're going to lock in the one decision that separates traders who grow from traders who keep restarting. This isn't about another trick. This is about who you choose to be after this audiobook ends. Before anything else, comment below. What's the one habit you know is holding your trading back right now? Name it. Awareness is the first move. Most traders treat learning like entertainment. They listen, they nod, they feel motivated, and then nothing changes. Elite traders don't do that. They turn insight into action immediately. Think about someone like Warren Buffett. He didn't win because he knew more indicators. He won because he stuck to simple rules over decades with ridiculous patience. That's not talent, that's commitment. Here's what you've really learned in this audiobook, whether you noticed it or not. Consistency isn't about fixing one mistake. It's about building a lifestyle of small, boring, repeatable decisions. You learned how your brain reacts under pressure, why defense keeps you calm, how systems beat willpower, why correct risk sizing protects your emotions, and how identity turns discipline into second nature. So here's the question that actually matters. What happens tomorrow? Do you go back to chasing, forcing, overtrading, or do you slow down, respect risk, and execute like a professional? By the end of this chapter, here's something most people never hear. The market rewards who you are when nobody's watching. Not your best day, not your biggest win, your habits. Let me ask you something real. If nothing changes after this audiobook, whose fault is that? That's not pressure, that's power. Because now you know better, and knowing better means responsibility. Here's the simple framework to carry forward. Protect capital, follow systems, trade small enough to stay calm, judge yourself by process, not outcome, and show up the same way every single day. That's it. No hype, no shortcuts. If this audiobook helped you see trading differently, do one thing right now. Subscribe to Psych Rich, not for motivation, for reinforcement. Share this with a trader who keeps sabotaging themselves, someone who needs to hear this before it's too late. And come back to these chapters whenever emotion creeps in. Repetition builds discipline, discipline builds consistency, consistency builds freedom. So here's your final question. Who are you choosing to be the next time the market tests you? Because the market always tests you. And when it does, show up calm, show up prepared, show up like an operator. This isn't the end. It's the beginning of how you trade from here on out.